It's Mad G, making moves, flipping real estate. We building wealth, get your minds right and elevate. Yo, it's the mortgage king, we do it truly, bro. Dropping gems like a thief up in the jewelry store. Wealth building equity in real estate, the mission. Collaboration is greater than competition.
YouTube, what's going on? Matt Garland here. I'm just on IG and I'm saying, yo, it's on IG. But what's up, y'all? This is Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. Look, man, we got a special episode today. All right, but I need you guys to like this, share this, because we're about to have a really good conversation and also give you a preview of the Rants and Gems podcast show with my co-host, Quiana Watson, who I'm going to bring her on in a few minutes. All right, so look, first we're going to pay some bills. If you don't follow me on Instagram, make sure you tune into my Instagram page, MG the Mortgage Guy. Go over there, follow me. I put a lot more content out there on a daily basis than I do on YouTube. But like I promised, I'm going to try to give you guys as much information as I can here on YouTube, because my goal is to make MG the Mortgage Guy the #1 page, or channel, I should say, on YouTube for everything related to real estate. All right? Now, today's episode, first episode, Rants and Gems, the preview. I'm not even going to call this an episode. This is the preview. All right? It's brought to you none other than Earn Your Leisure University. I'm not going to take too much time to talk about that, but Tooks, play that commercial real quick. EYL University.
EYL University is the biggest online platform for education, but it's much, much more. It's actually a community. Our private Facebook group has over 8,000 members and 20 infinity groups. The students teach themselves just as much as the professors do. We have weekly webinars. We have over 100 past webinars. You get access to MG the Mortgage Guy's Real Estate Blueprint. You get access to monthly financial planning calls with yours truly. You get access to our monthly group chat investment calls and much, much more. So, go to EYLUniversity.com right now and take advantage of our limited offer, blowout sale, 65% off of the annual membership. EYLUniversity.com right now.
All right, so make sure y'all subscribe to EYL University. Shout out to Troy, Rashad, Mike, Bam, Jamal, Janet, all the team at EYL University. Link will be in the description to sign up. All right, 65% off. Take advantage of it. You don't want to miss it, all right? So, look, let's bring on our lovely co-host for the day, Quiana Watson. Come on, where's Quiana? Let's bring her on. Quiana Watson, how are you today?
Hi, guys.
Looking so glorious as usual.
Well, I appreciate that. Thank you so much.
I'm loving the fit, as always.
I appreciate it. You know, I wanted to come through for the...
Yeah, she's always coming through, man. So, look. Like I told you guys over on Instagram, and I just told you guys just now, we have our podcast, and I'm putting it out there. It's been on the wraps for like 2 or 3 months right now.
Matt couldn't wait to throw it outside. He was like, you know what?
Y'all look.
He sent me a text message at 3:30. Oh, yeah, so we're doing this thing today. I'm like, what's going on? Next thing I know, I look on Instagram. Yeah, just so y'all know. The podcast is dropping.
Just so you know. Look, man, the people want this. They've been asking for it. Your audience has been asking for it. My audience has been asking for it. And I say, you know what? I'm tired of keeping this on the humble right now. We're going to put it out there. We're going to force the issue so that way the people can get what they want. Who better to bring it than two people who are in the business, active, from a real estate broker perspective, a loan officer perspective. We're both investors. We both run multiple businesses. So it just makes all the sense. And most importantly, we're friends in real life. You know, when me and Quiana, when we speak for hours, and it's usually over wine.
Yes, usually.
usually over wine. So when y'all start seeing those episodes of the podcast drop, best to believe there's going to be some good wine or champagne in the mix of these conversations, too. And we're going to give y'all nothing but rants and gems so that way you guys can go out there and execute on your real estate transactions.
I agree. We really talk about that.
Before we get started, how can if people don't know who you are, why don't you tell the people on my channel, my YouTube channel, who is Quiana Watson?
Hi, you guys. So I'm Quiana Watson. I am a real estate broker, entrepreneur in the Metro Atlanta area. I own a real estate firm, Watson Realty Co. With this business, we are a small minority Black-owned real estate firm. I also have an online real estate training academy, Agent Tools for Success. We are training agents. Today we had a graduation for our first quarter winners. It was amazing. So we celebrate their success with using the systems and processes I put in place to be successful in the industry. So that's who I am in a nutshell. I am a wife. I am a dog mom. I am a bit of a fashionista. I enjoy great trips and fine dining. And if I don't do nothing else, I'm going to laugh and I'm going to make me some damn money. That's who I
That's a
am.
fact. that is 100% fact. Fine dining and gonna make some goddamn money. That's what it's all about. So look,
Yes.
let's get into today's topic because this is a hot topic. Whoever hasn't been living under a rock, and if they're looking to buy real estate, everyone knows it's a seller's market right now across the country. It doesn't matter what market you go into right now. So I posed this question on Instagram, I think it was 2 days ago, matter of fact, and I asked, I said, Realtors, why don't y'all like FHA and VA offers in this market today? And the comments, my DMs, my text messages went bonkers. So I said, why not have this conversation as a preview as what they're going to get on the podcast? And who better to do it than someone who's producing a lot of real estate in Atlanta, Georgia right now. So Quiana, why the hell is it so difficult for our FHA and VA home buyers who's just trying to buy a house, man? Why can't they get their offers accepted right now?
You can't get your offers accepted because in the this is one thing I want you. Let's be very clear because y'all was commenting, y'all was trying to give me the blues in the Mets post, and I ain't going for it. I'm not
They
here
was
for
getting
it.
at you.
I was like, oh, I said what I said, and I'm gonna say it again. As a real estate professional, when I'm representing the best interest of the seller, look at it from the mindset of the seller. You have what is called the amendatory clause. The amendatory clause says no matter what, it could be the day before closing. For FHA and VA, if this home does not appraise at the value on the contract, the buyer can terminate and receive their earnest money refunded back to them. Furthermore, there's a number attached to these appraisals that stick to the home for 120 days. So if your appraiser had a bad day, because they're overworked too, let's be honest, appraisals are subjective, they're overworked, they're underpaid, and they do an appraisal on your home, and they say the home is only worth $400,000, but we have it in the contract for $500,000. The seller has to either reduce the price or give your earnest money back. Why in the world would a seller do that when you can fight with a conventional buyer? Because they have appraisal contingency that ends. The amendatory clause protects you guys. There is no appraisal contingency on FHA and VA loans. So when you really think about the grand scheme of things, if I was buying a house from Matt and it came in at below value and I got conventional financing, he's like, well, anyway, out of here because your appraisal contingency is up, so I'm keeping your earnest money. And I'm gonna get me another buyer because what your appraisal is, don't stick to my house. Let me find me another conventional person and see if they're gonna run out on their appraisal contingency and keep their money. As opposed with VA and FHA, they lose every time. Every time.
But what if the buyer is willing to cover the appraisal gap and they can show proof of funds?
If the buyer was willing to cover the appraisal gap, they would write that on the contract. That is the problem. I'm representing sellers and buyers right now. When I'm reading the contracts and we're looking at who's going to pay the gap, the only people that are writing to pay the gap are conventional buyers. VA and FHA buyers consistently are not writing that special clause on the contract. Now, if they were to write that or pay option money, do more things to make it more attractive to the seller, then you would get your contracts accepted. Because my clients, my agents at my agency, they're getting FHA clients accepted, but they are paying the difference from the appraisal price. They are adding special stipulations. They are doing the things that most agents aren't doing because I am from Fayetteville, North Carolina. That is Fort Bragg Air Force Base. My dad was in the Army. My sister was in the Army. My grandfather was in the Army. I have friends that are still in the Air Force and the Army because it's a military town. So come up from a VA perspective, We understand that this is service to our country, and so you want to utilize the VA benefits. But because you're saving so much money by not putting money down, you may want to have an agent that can navigate your contract by putting other special stipulations on there that are more in favor of the seller. Buyers are crazy. Y'all think when you write contracts, it's supposed to be in the favor of you, and it's not. You're writing a contract that's more in favor of the seller so you can win the offer.
I mean, you dropped a lot of gems right there, especially about the amendatory clause. And this is what I try to coach my buyers who are using FHA and VA. First things first, me personally, me as a buyer, because I'm actively buying real estate myself right now, right? I'm not paying above your listing price or appraised value. That's just me personally. I'll walk the hell away in 2.2 seconds. I'll lose my appraisal, my inspection money. I don't care. If it doesn't appraise, I'm not moving forward. That's just me. But what I tell my home buyers that are looking to live in their primary residence, and this is their dream areas, a dream house, or whatever the case may be, unfortunately, the market is not on your side right now. So if you're going to take any low down payment loan, whether it's a conventional low down payment, FHA, VA, USDA, NACA, whatever it is, you have to be in position to pay that appraisal gap because these sellers don't give a damn. They are not accepting it. And I tell them, look, you got to be very vocal about this when you're putting your offer in, that you're willing to pay whatever appraisal gap. Now, I don't recommend waiving your appraisal contingencies because I like to negotiate, but unfortunately, this is not the time in the marketplace, especially if you're buying retail. It's not the time and place to go out there and try to not negotiate with the sellers right now because they don't have to choose you. It's thousands of buyers right now that are able and willing to pay that appraisal gap. So what other tips from a realtor perspective do you give your buyers who have minimum down payment, low funds, and they're trying to get a house right now?
If you have minimum down payment and low funds, you need to wrap your mind around you're not going to get the best house on the block. Because that house that's the best house on the block is going to have multiple offers. And you will consistently lose. So what you want to do is, in the mind of real estate, they always say you want to get the ugliest house on the best street, right? So you need to focus on more sweat equity and stop trying to get these turnkey homes when you do not have the funds to compete. So focus on sweat equity. Get you a home that may need some work and take your time and finish that work, but you at least win the offer because now instead of competing against 15 other people, you may be competing against 1 or 2 other people because in real estate retail, real estate investment is completely different than real estate retail. As an investor, it's like, look, we already know we get in a house that got issues and we are fine with that, so we don't have to compete that bad. Retail, y'all want turnkey, pretty. Y'all want granite countertops. You want quartz countertops, soft close cabinets. You want all these things, and you want to be in a swim tennis community. You want an acre. You want a pool, and you are competing against 15 other offers, and your offer is not strong enough because you have the weaker financing and you don't have any funds. So you guys really, no other way to say it, humble yourself. Get a house that matches your budget, that matches your financing type, and that matches your circumstances. Understanding that owning is better than renting. But y'all have to calm down on your requirements because you're competing with people that are way more qualified. And when I say by better qualified, you have people that are doing conventional loans, they're putting down 30%. So they're only financing 70% and they paying the appraisal gap. And here you come with an FHA loan and you're putting down 3.5%. And the first thing a seller thinks, I never thought that a seller would say that, but I had a seller ask me, why would I take this offer? They're not even putting enough money in the house. They don't have no money. They assume you don't have money. It's not us saying it. It's not the agents. These sellers are savvy. They're like, well, why are they only putting 3% down? When I bought my house, I put 20% down. And you guys think it's the agent. And thinking from the eyes of a consumer, I'm going to go with the person that's putting the most money down because I'm going to assume that they have more flexibility, they have more money to spend. And maybe, just maybe, we should get out of the mindset of getting the most with the least. Because some of y'all got 20%. You just don't want to spend it. Think about that.
That's
He had to cool down. I think something happened to his mic, but he's going to come back. So while he's preparing to come back, really think about it. Understand that it is not the agents that are pushing this thing out here. It's really the market.
Yeah, I'm here. My bad. The camera died on us. So you're going to see my nice profile picture for while Tukes get his shit together.
All right, we're here.
But we here though. I guess the camera's overheating. It's too hot in here. I don't know. But I think you made a lot of good points. I wanted to touch on something you said, I think, and it's something that I preach also, is about rehab, right? Most of these home buyers are trying to, like you said, courts, hardwood, swim communities. They want, best school districts, which I understand, but they want that house that they can move in a week after closing. I preach rehab all day long, and that's why I try to tell people, stop being emotional. You got to think like an investor. Even if you're going to buy your primary residence, you have to go after the rehab. Now, are there now, for those home buyers in your market, Quiana, are you seeing them having more success going that route versus going at the top of the market right now?
Yes. Those that are willing to take the house that is not completely done, they're having more success. We're also pushing people that are doing FHA financing and putting the minimum down and can't compete with multiple offer situations. We're pushing them towards new construction opportunities because the builders are kind of set in their pricing, but you're not finding yourself in so much competition. So either settle for a smaller new construction home, which is going to have much less land because the cost of land is up and Atlanta is growing, or get you a home that is a fixer-upper that not too many people are willing to do the work in, because people want turnkey.
Yeah, people want turnkey, and I think that's what's hurting a lot of buyers out here, is because everybody wants turnkey, but you can't go turnkey. You got to put that sweat equity in it. And in all honesty, look, let's call a spade, and this is just my personal opinion. Where we in 21? I've been on record saying this several times. I think 2023, 2024 is when we're going to start seeing a correction in the marketplace. So these folks who are buying right now 100K above asking price are going to have issues with their homes being upside down. So if you go ahead, if you buy something that's maybe a little bit below market, that needs a lot of work to put into it, 50, 60, 100K worth of work, those home buyers are the ones who are going to be safe because they're not buying above the marketplace. So it's also a smarter way to buy if you're really serious about home ownership right now. Can you hear me good?
Yeah, I can hear you.
Yeah, so to me, I think that's a smarter way when it comes to buying a house. It's just rehab. Like every house that I purchase is always something I need to rehab. Especially if something I'm living in, I won't buy nobody's nice new construction. Like I'm not a big fan of new construction, me personally, because I don't think these builders do a good job of building. That's just me personally. Because I've seen so many new builds and I'm like, damn, this looks terrible, right? But I think that's just the smartest way to go. What are some other tips that we can give the folks who are watching this right now to get their offers accepted? Because people just are looking at it as realtors are being discriminating towards them, especially if it's a black buyer, black realtor. They all feel like, oh, you're not helping the culture. You know what I'm saying? By telling people this information.
Well, this is my thoughts. We're not helping the culture. So let me be honest with you guys. 98% of my clients are black. So when I'm representing a seller, they're also black. And they're selling their assets to make a profit because they have other investments that they want to go into. So what you want them to do is say, well, I'm going to take your offer that's offering me less and less of a guarantee to help you out and not take what's in the best interest of myself. And that is unfair. That is unfair to ask anyone to do that. They don't know you. They don't owe you anything. I think what we need to do is start preparing ourselves for the market that we're in. And like when I was watching that video with Dave Ramsey, and I'm reading articles every single day about the real estate industry, What you guys are hoping to happen is this market is going to crash and I'm going to get a deal. And there's no market data to support it. The only thing that supports is it's going to stop peaking. This spike in pricing is going to slow down. So instead of us spiking like this, it's just going to get to us area and it's going to level out. But so it's not like you can start charging people $10,000 for an airman's bag, and now you're going to say, all right, now we're out of the rush. Now it's $5,000. It don't work like that, and you know pricing doesn't work like that.
Correct.
What the price of homes are, where they're going to start sitting up at, they're going to stay there, and then they're going to level out. And so when they start leveling out, we're going to have foreclosures. We're going to have all of that. But I'm trying to tell you guys, and this is my strong opinion, when we do get these foreclosures,
can you put it back up?
And y'all don't have the cash because you're going to still be financing. Do you know how many people have cash right now ready to invest in these foreclosures so they can build their rental portfolios? I can't. And I was asking my assistant, I said, where is all this money coming from? I listed a house and got 8 cash offers. Where is this money coming from?
Yeah, it's a lot of money in the streets right now.
So what I want you guys to really think about is if I'm financing and I'm using FHA and I'm using VA and I don't want to spend more money later for the same product, what is my plan? What is my strategy? Because we're so used to doing the most with the least. Listen, you should have bought 3 years ago when 100% financing was popping, when FHA was popping, VA was popping. All you had to do was write a strong enough offer, you would win the offer. You missed that mark. So now this is where you are now. And you have money saved, but you don't want to spend it because for some reason, you just think that buying a house, you just deserve to only put 3.5% down. Not that you can't put down 20%. The prices are going to continue to increase and you're going to miss the mark again. And when foreclosures come, you're going to get beat out by the cash investors and they're going to rent those houses back to y'all. That's all. I said what I said on that.
You said what you said. I mean, look, first of all, the Dave Ramsey video was actually really good. I watched that entire video, and I don't necessarily agree with everything that he has to say. But in this particular moment, I agreed with everything that he was saying. And it's something I've been saying, too. I don't think there's going to be a crash. And I think people who are waiting for foreclosures or waiting for a price deduction, you're crazy right now. On the seminars that I'm doing with DJ Envy, I give a comparison, right? The cost of waiting. A $500,000 house today at 3% will cost you around $1,800 a month, principal and interest payment. And if the market did crash, a 30% crash, that's the worst crash on record. That's the Great Depression. So that means if the house is $500 today, it'll go to $350 tomorrow if it's a 30% crash. But if that happens, you better believe interest rates will be above 6% at the same time. So your payment on $350 at a 6% versus a $500K and 3% is pretty much the same. It's an $8 difference, and it's $8 higher for the lower price with the higher interest rate. So your cost of waiting is more expensive to wait, in my opinion, because you're not really saving nothing. Although that price might be a little bit lower, but the interest that you're going to pay off the life of the loan, it equals out to everything you thought you were saving. So why the hell are you waiting? That's number one. And I don't think people should be waiting for a crash, a foreclosure crisis, like you said, because you can't compete with cash and you can't compete with these hedge funds. Hell, nobody can compete with these hedge funds.
None of us.
None of us. No matter how much millions we make or whatever the case may be, we can't compete with these guys who got billions and trillions. And what people don't understand, the banks are going to hoard those foreclosures. They're not going to release them all at the same time to the market. They're going to hit up their buddies on Wall Street at these hedge funds and say, look, I got 1,000 homes that we need to get rid of. We can't disrupt the market, so we're going to give them to you. You know what I'm saying? So I think people really need to be educated on that and really understand what, if it does crash, how is it really going to look and how it's going to really affect them? Because in most parts, most of the people who are saying they're going to wait, they're not going to be able to take advantage at that point.
I know. I say it all the time. And I mean, I feel like I do really well. And I even tried to go to the courtroom steps in Fulton County and buy me an investment property. Mm-hmm. And I feel, these are some big dogs out here. When people think about foreclosures, what you guys think is, I'm going to be able to finance my foreclosure. By the time you can finance the foreclosure, it has went through a couple of rounds. The first round is being sold on the courtroom steps. They're going to do that first, and that's cash money. And those houses that you guys are seeing on Zillow and all that stuff, and you're like, Quiana, that's a foreclosure because I get it all the time. I'm like, scroll down. You see where it says being sold on the courtroom steps? So do you got $200,000 in the money order too, or are you waiting to finance? And most of you are waiting to finance, and you want to get the deal that your cousins and your uncles and everybody else got back in 2008, 2009, and you just got to let it go.
Yeah, that was unprecedented times.
Yeah, we gotta let it go. We had over 5 months of inventory then, right? It was way too many houses for people. Now
Absolutely.
we don't have enough houses for the people.
Yeah, look, I mean, national supply right now is less than 2 months. I was just in Orlando with DJ Envy and Flipping New Jersey at their seminar last weekend. The supply in Orlando is about a month of homes. Like
That's Atlanta.
And that's Atlanta also. It's about a month, a little bit over a month of supply. That means the homes, now there are homes being sold and being listed. It just means that as soon as they come on, they're gone, right? So it's just steep competition. So I don't understand why people really think they're going to wait, they're going to do this, they're going to do that. It just doesn't make any sense. And like you said, you ain't got you ain't got a money order for $200K anyway.
No.
You ain't got the money.
And it's okay, but you just don't. And I think what it is so much false information out here, leading us to believe that we shouldn't pay money down to buy a house. I think the worst lingo that was ever created was saying a first-time home buyer program. That literally made everybody believe that because I'm buying my first home, the government is going to give me something. And they never gave you anything. They charged you inflated interest rates. You guys were paying high funding fees, thinking you're getting all this money, not realizing it's all wrapped into your loan. And so meanwhile, you got a $250,000 house and you paying $1,800 a month because your interest rate is 4.75%. Your funding fees were all rolled into it. But the only thing is you didn't have to put no money down. Well, you got someone else that said, I'm going to put my money down. They got the same house and they're paying $1,200 a month. And their interest rate is 2.75%. But we don't do a deep enough dive because we're thinking so short term. And you have to look at building wealth and real estate as a marathon, not a sprint.
Yeah, see, for me, I'm a fan of OPM, right? I love other people's money and I love spending the bank's money more than my money, right? So I'm a fan of minimum down payment programs because let's face it, a lot of people out here just don't make the money to save the amount you need to put down 10% or 20% in certain markets. Like in New York, a single family home, a fixer is probably and I'm talking 5 boroughs in Long Island, is probably going to run you $600K just for a fixer, right? So now for somebody to have $60,000 plus another 25, 30 for closing, they don't have $90,000. So that's why I like FHA, I like VA loans because it gives the people who might have good credit, might have everything else going, they just don't have an ample amount of savings, and it will probably take them years for them to save that type of money. So I like those programs because it gives them the ability to own, and I'm an ownership advocate, but I do understand what you're saying and your point as far as the market is concerned. The market is just not friendly. Now, when it comes to multifamilies, look, if you don't have 15, 20% down on a multifamily, you can't go conventional. FHA or VA is your only option. And multifamily homeowners, or sellers, I should say, I think they're a little bit more lenient to that. They understand that, okay, you could probably only do FHA or VA for those type of properties. But even still, those deals right now, especially here up north, because we have so many of them, those buyers are coming with 20, 30, 40% down right now. It's just like, damn, people I would have never expected to have this type of money are pulling money out the woodworks and buying these properties. It's crazy.
You know what it is though, and I'm grateful for these types of platforms. People really want to own real estate. That's a great thing. So let's just say this. Let's double back and say the fact that you even want to own real estate, and back then it wasn't popular. Most people didn't discuss it as an everyday thing. You're already one step ahead. Now you just got to have the strategy to use the financing type that you have to own a home. It may not be your dream home. It may not be the home you thought it was going to be, but you think about it. What am I waiting for? And if you think about it, there's nothing to look for. Get the home that's not the best home on the block, that doesn't have 20 offers. Because oftentimes you guys think it's your agent. It's not your agent, it's just your circumstances. And if you can't change your circumstances, you have to change your options.
And by changing your options, you might can't get that swim community that you're looking for. You might have to be on the outskirts of that swim community and get something that might not be as pretty and nice and just fix it up basically.
I agree. Yes. And be a little further out. You know, it's okay. Everybody doesn't live in the city of Atlanta.
So
You know, everybody's living their own cities of wherever they are. Like, understand that and this is just pure logic. The closer you are to your metro city, the higher the price point is, the lower the square footage. The further you go, the more you can spend, the higher your square footage. Just think that through and write down what the sacrifices would look like for you with building wealth in real estate if you were to wait. And then make the decision to go forward with your financing type and accept the options that are going to come with that.
good gem. So what are some actions? That was a good tip. Like, what are like three or four tips that you can give any first-time home buyer right now for who's looking to use minimum down payment loans? Doesn't matter if it's FHA, conventional, or VA, NACA, right? What are the 3 or 4 actionable items that they can do right now to make their offers more appealing to these sellers, knowing that they have a minimum down payment loan?
The number one thing you want is there needs to be some type of cash reserve to pay the difference between pricing. I don't care if it's 10,000, 7,000, 5,000. You know, you just need to have something there to show them that you're willing to put a little money in their pocket to get where you want to be, because you will be paying their asking price for the most part. I'm only speaking for Atlanta, but I speak to agents in pretty much every city, and it sounds like everybody's experiencing the same thing. So have some capital. Be very flexible on your term, and your terms are your financing contingencies and your appraisal contingencies. You guys need to really talk to your lenders. They need to have really short contingencies. I had a lender the other day, the audacity to tell me that he needed a 28-day financing appraisal contingency, and we were in a 15-person competitive offer situation. I said, oh, goodbye. This means you ain't even touched this file.
Why did he need 28 days?
I don't even know. She brought this lender to me. I pushed her over. He said they were busy. I said, no, it looks like to me you never touched the file. So it is important for you as a consumer to ask your agent, because every agent is not the same. Ask your agent and your lender, how short can we be on the financing and the appraisal contingencies? You know, I'm only approved for $350,000. I keep getting competing offers, but shortening these 2 items will make me more attractive. So those are 2 for 1.
But let me ask you this, though. I'm glad you brought that up because, and this is to defend my lenders here, right? We don't control these fucking appraisers. Like,
Yeah.
like that's out of our control. How are we supposed to tell you realtors? Because y'all realtors ask me this every day, and I'm like, you know the pain we're all going through with appraisers. First of all, there's not enough of them for the amount of work that's out there. They're all talking about they're backed up, they're overworked, blah, 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 blah. I have appraisers coming back to me, turnaround time 4 to 6 weeks. What the hell can we do as lenders? Like, I think that's kind of unfair from y'all realtors right now, because y'all know this shit too, and y'all still don't care. Like, what the hell? We all in this together. Like, okay, financing contingency, great. We control that. You know what I'm saying? So my turnaround time, 48 hours for a commitment. Okay, 2-week financing contingency, no problem. Cool, I'll get you your loan commitment. But appraisal contingency, like, how can I control that? If I tell you 2 weeks, I know I'm lying to you.
Well, you know what? I get it sometimes, but y'all also can build these relationships with these appraisal companies, and you need to tell people up front, you don't have to pay for the rush. I tell all my clients, I don't care what lender you are.
A rush don't mean shit, though.
And sometimes it don't. But
No, Quiana, not no sometimes.
I'm being honest, I'm closing deals all the time here, and people are getting appraisals in 12 days, 14 days. They're happening.
14 business or calendar?
Whole day, entire.
I mean, look, all my deals are rush, but these appraisers don't honor the rush. And from a lender perspective, we can't build a relationship with the appraiser directly because of the regulation.
I know.
It's the AMCs, the appraisal management companies.
I know.
And it's only so much relationship you can build with them. Although I'm cool with all my AMCs, but they like, yo, Matt, my hands are tied. What can we do?
Look, let me tell you though, I think for us, we have to be real honest with the clients. Because you know
which client though, the seller or the buyer?
Everybody. Because
okay.
What's happening is the buyers are losing earnest money left and right because appraisals are coming in low. Sellers like, I'm moving on to someone else. And then you got lenders like, well, I ain't know nothing about it, blaming it on the appraiser. And the whole thing is like, if everybody communicated within that time, I'll tell my client, I rather terminate right now. We don't have an appraisal, and I know we are paying too high. What you want to do? Because you want to risk your $3,000, $4,000. Right now, earnest money ain't even that. That's another tip. Get your earnest money up. Get prepared to put down $7,000, $10,000 earnest money, even on a regular $400,000 house, because that makes you look more attractive. So
let me tell you something. That's normal in New York. See, when I get these down,
get away with 1%. Last year, $2,000 is fine. This year,
see up here, there's never been like that. If you tell somebody you putting less than $10,000 down on the contract, the attorney will laugh at you. Like, what the hell are you doing? Like some of these attorneys be like, oh, you putting 20% down, put the whole 20% up on contract. And then that's when I gotta be like, oh, hell no, don't put your whole 20% up.
I've seen it all. So if you guys but you gotta have a strong realtor that understands the different terms and timelines of the contract to protect your earnest money. But you got to put your money where your mouth is right now in this market, especially if you're using FHA financing. If you're using FHA or VA, the more you can show this seller that you actually got some money, the better. Because they assume you don't. And it's not the agent that's doing that. That is the mindset of the seller. Because most of these people are selling that purchase houses back in the day. They had to put down 20%. They was normal. That's what they did. Think about it. You guys really think about it.
These sellers don't be knowing a lot though. Let's call a spade now. It's a lot of these listing agents all over the country poisoning the well. What the hell is up with you listing agents? Stop poisoning these sellers with all this ridiculous shit that y'all tell them about FHA and VA loans. Now, yes, some of the sellers are savvy. Some of them like, I put up my 20, why can't they? But for the majority of them, they're not like that. I know for a fact that I've heard listing agents tell them flat out, I told my seller we can't have those offers because we don't want the headache.
Listen, okay, we have a code of ethics, right?
No, ain't no code of ethics here. This is Rants and Gems, Quiana. Ain't no code of ethics.
No, I'm talking about when I'm representing my clients. If I'm representing
okay.
My job is to tell them the truth. I'm not going to tell them a lot. I got a spreadsheet and it's an explanation of each different type of loan. And then we have every single offer. So it's 15 offers, blah, blah, blah. This reminds them of what we talked about before, of what each loan type is, right? They not slow. They know what an mandatory clause is. My job as their realtor is to educate them on that. Because what I don't want to do is list the house at $500,000, take it off for $550,000, accept an FHA buyer, right? Get the appraisal back, and they already told us we can pay you $550. Appraisal comes in at $525, and the buyer says, "All right, kiss my ass, I'm out." Right? Give my earnest money, and that's what y'all can do. That's the power that the mandatory clause gives the buyers on these loans. So why would I?
But you know what though? 99% of the buyers don't even know what the hell a mandatory clause is.
Because they agents suck. Because my people know.
Because that's why you're the GOAT, right? But a lot of these agents don't even know that. Loan officers don't even know that. They just know they got to get it signed, but they don't know what they're telling the people to sign, right? Even attorneys, for the most part, don't even know that.
Yo, Alinda, on your post under my thing, asked me, talking about, but what does the mandatory clause mean? I dropped my phone. I said, this is too much.
Hold on. I got to take off my glasses for that one.
This is beyond me. This is above me. It's above me. It's above me now. How you going to ask an agent what the mandatory clause is? This is your part. That's the problem. That is the problem.
But see, but they don't know this information, right? So when the buyer is going into the situation, if they have the gap and they could show the proof of funds, because a lot of my buyers that go FHA, they got their 401ks, they got their retirements, they got
But they better
100 plus
include it
in
with the
there.
offer. I highly recommend y'all start showing these sellers where the money resides. Attach a copy of your bank statement. Attach a copy of your 401k. Attach a copy with a letter stating I'm choosing to finance FHA because my debt to income ratio is high and I went to school and unfortunately that's my case, but I got the money. So look
That's
here.
a gem. Blame it on student loans.
Student loan, but I got the money. Here is a copy of my bank statement. Y'all have no clue how much further this will take y'all.
That's a gem right there. So you're basically saying, make that offer, show your hand.
Yeah.
Basically, show your hand and tell them like, look, I can go conventional, but I don't want to. I got these higher student loans. They're hurting my approval numbers. Blah 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 blah. That's why I gotta go FHA. But look, I got 40%, in my account.
This is called sales. And I be feeling sorry for some of y'all because I be reading these offers and y'all agents suck, man. They just suck. Your agents don't know what they are doing.
So tell us what the agents are doing wrong right now.
The agent's not painting the story for you at all. They're not painting the picture for you at all. They're just submitting your dry offer and you look like somebody that don't have no money, that can't afford to do conventional, and your agent is not advocating for you. And that is why you are consistently losing offers.
Wow.
Sales is about painting the picture. Sales is about taking you are a salesperson. Our jobs are to sell our clients. So if I'm listing, I'm selling the house. If I'm on the buyer side, I'm selling my client. So I got words. Let me tell you about my client, who we are, what they do, Dr. Such and Such, whatever. I'm coming up with anything. Anything. I'm making anything. I just got to explain what it is.
Essential worker, all that good stuff. Everything. Nothing's left for grabs. We're gonna throw the whole kitchen sink at them, basically.
Absolutely. You have to.
Look, guys, I hope y'all taking notes, man. It's about almost 350, 400 of y'all here watching this live with us right now. I appreciate the support, but y'all need to go hit that goddamn like button and smash that like button because right now we dropping some gems, man. We trying to give y'all some tips on VA. Not even going to say FHA VA. Low down payment buyers in the seller's market right now. What do you have to do to get those offers accepted? And we gave you guys so many good gems right now, from looking at distressed properties or homes that need rehab, from painting your home picture. I like that. Throw the whole kitchen sink at them. Make sure you're writing a good motivational letter. Have a template already made up.
Yeah.
You know what I'm saying? Because if you're going to submit multiple offers, and in this market, you have to submit multiple offers. You can't. One house is not your dream house. Every house, you can't be emotional. You got to just look at all these homes and you got to just fire away, and just have your template already with your offer package template, I would call it, and be ready to fucking give your whole life story, your blood type to that seller. Yeah. Because you got to pull out the heartstrings.
Sometimes y'all be like, oh yeah, I want my first home and this has been my dream. All right. You ended with that. You started with, let me explain to you, my buyer has money saved. They have been saving for this many years. We got about this much money in the bank. So that's how you started off. And then you ended with the fluff. Like, oh yeah, they really love this home. Because the sellers want to know where the money resides. I'm telling you right now, every seller I got, they're like, "Can I make 6 figures?" We squeezed in 6 figures out of nowhere. I'm literally listing houses, and I'm like, all right, we're gonna list at 20% above the last house because we can, and we're getting the money, and we're closing, and they making the money because we can.
So the sellers is just like, you know what?
They want the money because a lot of them are doing things like, that's what I love about us though, because they're like, Quiana, one of my clients was like, she started off she works for like the airport, right? They don't, they make pretty decent income. Then she started wholesaling houses. Then she created her own notary business. So it's like, Quiana, I'm gonna move back in with my parents. I'm gonna get this 6 figures. I'm gonna create another business because now she recognizes the value of creating another business. And I attest that to all the education they get from being online, EYL, all this stuff, right? So when you look at this, from the bigger standpoint, sellers are like, why would I give up my dream of starting my business to take $20,000 less because you want the dream of buying my house?
It's not happening.
Make it make sense. You can't make it make sense because you guys aren't looking at it from the mindset of a seller. And the sooner you stop thinking like a buyer, when you start thinking like a seller, you just might get your offer accepted because you're going to do what's in their best interest, not yours.
So Jamie Jackson in the comments, highlight that comment for me, Tokes. In the comments, Jamie Jackson, she says, and I'm going to put it, it's right there. Go down. No, go down. Right there, sellers. Yep. She says the sellers are coming up with their own list prices before we even get to the damn listing appointment. Laughing out loud. Quiana, can you vouch for what Jamie Jackson is saying right here?
What she said is absolutely correct. I have people, they don't even care about what's happening in the market. So basically, I want to make 6 figures. So this is how much it's going to take for me to make it. And you be like, ain't no comps to support it. They don't care. They're like, all right, but this is what we want. So how can we get it? How can you make me look good to get this? And the first thing they say, y'all think that buyers are the only people reading the article? Buyers are the only people looking on the internet? Buyers are the only people listening to everybody talk about the market? No, it's the sellers too. I had to tell her, the first thing she said is, so we're going to take this offer. We're going to make them pay the difference from the appraisal, right? I was like, ooh, you vicious.
Off top, she's like, yo, I know my house ain't going to appraise. I know my house ain't worth it. But
so the sellers are not that sophisticated as far as understanding lending types, but they understand dollars. And it gotta make dollars and it gotta make sense.
If it makes both sense, like Beyond Win says, if it makes both sense and sense, that's what they want.
That's it. So they may not understand all these loan types, but they know how to count some money. Because that's the only reason they sell it right now.
Wow. Look, man, this is a lot of gems, and this is why Rants and Gems podcast, man, look, this is cool. I'm in New York, you're in Atlanta right now. Yeah. This is great. But when we're going to be together doing this with the wine flowing, y'all have no clue what y'all in for. You have no clue.
It's going to be amazing. Me and Matt had the best conversations. I mean, we wanted to call this Rants and Gems for a reason. We're going to drop this type of gems to you guys. And we talk about other opportunities. Me and Matt will talk 3 hours talking about how to make money, how to conquer the world. We always discussing moves to better ourselves, better our community, better our families. We recognized a long time ago that our platforms were created to educate people so they had a better understanding of this home ownership goal. So yes, we've grown a lot since we first started just jumping on Instagram all the time and saying whatever, but we're true to heart with that. I want y'all to win. So yes, I do sell a lot of luxury houses, but I still I have a whole firm. Everybody's not only selling luxury, but you gotta help us help you. That's it.
Yeah. Look, this is a tough place to be a buyer, man. And look, and even as an investor, right? Going out there looking for property to buy, it is one of the most difficult things to do right now. And I talk about this often within EYL University, that I've already walked away from like $4,000, $5,000 worth of inspection fees so far this year, because the properties after inspection, sellers are not trying to do anything, and then they're not even trying to certify the rents. They don't. Like, people just don't care right now, and there's people that's coming behind me that's saying, look, I don't care if the people paying or not. I don't care if this is broken, this needs to be fixed. I'm going to overpay you, because they're just so happy and thirsty to get in the game right now. They're kind of messing up the market a little bit for investors, but it's all good, because what's meant for you is always going to be for you. But it's tough right now. It is really tough right now to be a buyer. But I want to encourage everyone, you got to go out there and you got to shoot your shot. If your goal was to buy real estate in 2021, buy real estate in 2021. But just understand what you're up against. And that's exactly why I wanted to talk about this topic and have my co-host with me to discuss this, because we're going to come from two different sides of the spectrum on this. And hopefully it'll be enough information where you guys now can re-strategize and go out there and understand you're not alone. You know,
No.
I'm trying to buy right now, and it's difficult. You know, it's very difficult, but I'm still out there shooting my shot every single day and making offers. And you guys got to do the same, but you got to stack your money. The days of that 100% financing, I'm going to get a grant, down payment assistance. And then I know on my channel, I just had a couple videos talking about Biden's 25K or the 15K tax credit. If that comes into the marketplace, great. I hope they do it as a tax credit so that way buyers don't lose offers because you're waiting for some grant. You know what I'm saying? I hope they just do a tax credit. Make it a tax credit because it doesn't affect your process when you're out here making offers, right? And I hope they do it because, look, if first-time home buyers can get an extra 15K, you know, during tax time, great. That's money you can put towards your rehab. You know what I'm saying?
Exactly.
It's free money. But you can't go if you're looking for straight closing cost assistance, down payment assistance from lenders or sellers right now, this ain't the market for it. I'm sorry.
They're not doing it. They don't have to. They have to.
No one has to.
It's just not competitive enough. Like think about down payment assistance. Most of these programs need 45 days to close. That's not competitive enough in a market where a home is vacant and there's someone that can close in 14 days. I just don't think you guys are really looking at the competitiveness of it because we're so programmed to believe that somebody owes us something because we're buying a house. And it's just not true. You should want to buy a house because you want to buy a house, you want to build wealth, and you want to change the trajectory of your life. But this government that we have, I hope that they do the tax credits because even when they were doing the Georgia Dream here in Atlanta, I remember like it was yesterday, 4 years ago, Matt can attest to this. I was selling the Georgia Dream like it was going out of style.
Yo, your marketing on that Georgia Dream was like superb.
I was out here selling the Georgia Dream like it was going out of style because they was giving people $15,000 to buy a house. The market was different then. We could close in 45 days. We didn't have 4 or 5 offers to every single house. It was booming. I had clients walking away from the closing table with checks. Now, fast forward, those same people, if they want to sell those houses prematurely, you know they got to pay that $15,000 back, right?
Absolutely.
But none of y'all think about that because nobody really breaks down these down payment assistance programs. They assist with restrictions. And those restrictions really can hurt or hinder you. Or when you think about it, everybody then was getting 4.5% interest rate because they increased the rate. You just can't get something from nothing from the government. It's going to always be something.
You're paying for it one way or another, either on the front end or on the back end. Pause.
Exactly. So definitely get your mind right and prepare.
No, you definitely got to get your mind right. You definitely got to prepare. You got to stack your money. You can't be house rich and cash poor. This is something that I preach all the time. People always ask me how much money I need saved. As much as possible. You know what I'm saying? Like, you need as much as possible. You going into these homes, you guys are spending all your money. I don't think that's the right way to buy a house. Your foreclosure waiting to happen. So you definitely going to need money in this market. You know, if you gotta, and look, I have so many success stories of people when this pandemic started last March, where folks were like, yo, I'm gonna go drive Uber Eats, I'm gonna do this, I'm gonna do that. And they stacked up all that money and they purchased real estate. You know what I'm saying? They put themselves in a position to do that. One of my best friends, my man Bolo, he was in a serious accident last March, right before COVID. He's like in construction. He had his own company, but his accident prevented him now from doing any manual labor like that. So the dude hustled up with Grubhub, Uber Eats, all that good stuff, went to YouTube University and learned the trucking business, and in November purchased his first truck, and now as of today, he has 3 18-wheelers. And it all started with going Uber Eats, Grubhub, and working 16, 17 hours, right? So there's so many different success stories that I've personally, from people that I personally know and just from people that follow me, that tell me what they had to do to get that extra 5%, 10% up. It's opportunities out there for everybody. Everybody has intellectual property. Yeah. Like, figure out how to sell a course or do something where you can monetize the information that you have in your head, your skill set. A lot of y'all went to college and you have these degrees, but y'all doing stuff that don't even make y'all money with the damn degree. Y'all got to figure this out, man, because it's opportunities out there for everyone in this pandemic season 2 to get to a bag. It's season 2.
Pandemic season 2. This is the
We're in
biggest
season 2. 2021 is season 2. And season 3 is going to be on fire. I'm telling you. Season 3 is going to be record breaking for everybody who's a hustler. If you're not a hustler, like, because the way this world is going, it's either you poor or rich. It's just really.
The wealth gap is getting extremely large.
It's getting extremely large.
And it's because it's like the middle class is getting eliminated. It's just going to be here, and it's happening so quickly. And I think it's because I will say, because we have the internet, and so you have the regular person able to figure out a way to take this phone and make $1 million off this phone by doing certain things. People are making funny videos on Instagram, getting paid $1 million a year.
That's a fact.
People are literally saying, you know what, I'm really good at Canva. I'm going to create a Canva course. I'm going to record it and I'm going to sell it. And I'm going to tell people how great Canva is, and they're making $1 million a year on this phone. But we got to get out of our own way. What it is we're so used to, we're supposed to work a job, supposed to do this, save our 401k. The world has changed. You got to change with it so you can build this wealth. Why do you think so many people buy multifamily? I've never seen so many people focus on building wealth in my life, and I love it here. I love it here. Like,
look.
I'm bringing in an investors agent. Rashana Scott coming to teach next month.
Woo! Shout out to Rashana Scott.
My agent Tools for Success group, because I'm like, I don't want y'all just to make the money. Make the money, invest it, and flip it. Like, I've been there. I done made the money, do the money. Now I'm like, if the money I spend not going to make me more money, I don't spend the money. See what I'm saying? And because you see where we're headed in this world, in this industry, and real estate, to me, we're heading to a place where it's a sad place to me, because I started the foundation of my business with first-time buyers. And I just feel bad for those that don't understand what's happening in the market and decided to wait and think that something special is going to happen, because you aren't going to win later. It's just going to cost you more money. You're going to get less house. It's not going to be better. The interest rates are already scheduled to go up. Did y'all see that article come out about interest rates scheduled to go up? They're not going to keep people on. For what? The market is.
For what? It's no reason, and this is, and I tell people this all the time. It's all about timing with interest rates. The market doesn't care what your thoughts are, your feelings, or what you planning. You want to get an 800 credit score before you buy a house, or who cares? The market doesn't care, right? You got to go out here and execute and take advantage while this money is still cheap, because it won't be cheap forever. How? I'm telling people right now, you're going to get this 3% or 3.25%. They looking at me like I got 7 heads. And I'm like, what do you think? It's going to be 2.25%, 2.5% forever?
Right.
That was 6 months. Where was you 6 months ago?
Yes, see? But listen, even that changed. You saw 6 months ago, we was at 2.5. I had somebody get 2.35. Here we are now.
2.25.
And where we at now?
3.25.
And it happened 6 months.
6 months.
The people that do this every season, we do this. This is what we do. This is what we do every single day. We're closing thousands of people every single year. You can't tell me that we don't understand what's happening in the market that we work in every day.
Nah, I agree with that 100%.
Mm-hmm.
People gotta, get off the couch, stop learning, and at some point go out there and get that hands-on experience and execute and hustle right now. Because look, for all my first-time home buyers that's want to watch this live, that's watching this live now on a replay, y'all gotta hustle, man. Because just saying that I have, if you're buying a $500,000 house and saying I only got $25,000 saved, that's not good enough right now. It's just not good. It was good enough 2 years ago. Prior to COVID, it was probably good enough. But right now, it's all right. You're in a good starting position, but you're probably going to need another 50.
Wait a minute, I just had a heart attack. Somebody highlight ANGA phase 1.
Highlight that too.
Right
now. Phase 1. And phase 1 in the comments.
Yes.
Yeah.
And phase 1. ANGA.
Bro, you just passed it.
There she go.
There you go.
Matt, answer that.
So Matt, should buyers even ask for 3 to 6% sales concession, or not at all in the 3 to 4 multi units? And I love you, girl. Hell no. Like, hell no. Even if I don't care what house you buy, condo, one family, duplex, triplex, quad, you asking for anything, even 1% right now, those sellers are gonna look at you like you got 30 heads. And they're gonna say, you know what the agent's gonna do? They're gonna present your offer and then say, moving right along, the next offer. You know what I'm saying? Because legally they have to present it. They're gonna be like, oh, Ange Face 1 wants 3 to 6% on your 4 family. She's offering X. Do you like it? No? Okay, next. And that's what's going to happen. Even if you put in a bid, first of all, 9 times out of 10, you're putting above asking price. Right? In the retail market. Now, I'm only speaking towards the retail market. You're putting at asking or above. So in order for you to get a concession, that means the house has to appraise for higher than what you're telling the seller you're going to give them. The house ain't even going to appraise for what you're telling them. There's no comps yet. The buyer today's buyer is creating the comps for next year.
Yes.
So sellers concessions are wrap. What's your thoughts on that, Quiana?
That's why I made you highlight it. I almost had a heart attack. Wait a minute. I almost fell out. Who said that? In this market, it's no. The answer is no. And I'm telling y'all, because listen, I love y'all for real. If y'all don't get with the program of what's really happening here, you could just wait. You can just wait. That's fine. And you pay a little bit more for a little bit less. That's fine. But right now, it's not going to happen.
When's the last time you got an offer accepted with a seller's concession?
Me?
Yeah.
I'm trying to think.
Damn.
It was last year, but the house was over $1 million. And that's different. Because Atlanta, keep in mind our average price point is $348,000. So $1 million house is really considered luxury here. Outside like New York is like that's an everyday house, right? So it was over $1 million house. But that was it. Every offer that I got right now, we ain't getting nothing. And y'all can look at my page. I'm closing consistently. I got a closing tomorrow. Had a closing yesterday.
Let them know. Let them know. Multiple closes on a weekly basis, baby.
On a weekly basis.
Weekly, not monthly. Weekly.
Weekly. But it's definitely not paying. They're not paying any sales concessions. I wish I would write that down. For what? I'm wasting my time. I'm wasting their time, our time. We got agents texting us. I had an agent. I'm cool with her. I was like, listen, hey, let me leverage my relationship. I ain't gonna lie. Some of my relationships do help. Let me leverage my relationship, see if we can get this offer. She said, Quiana, don't waste your time. I had 50 calls. I got 20 offers. One is cash. And my buyer was FHA. And I asked her, I said, let's pay the house was $300. I said, let's offer them $325. She said, all I can do is $305. I said, child, before I even write this offer, let me just text this agent. She said, girl, don't even waste your time. We got 3 cash offers. God, please. And you're asking for closing costs. Are you kidding me? Are you kidding me? It's not happening. I'm just not even about to do it. I'm just gonna call the agent. You can just listen, and then I make sure I text them so I can just take the screenshot, send it to my client. Y'all have a good night. Let's start over tomorrow. You're not gonna win.
Like, have a good night. I'm about to go drink this bottle of Camus real quick.
Exactly. Have a good night. You know what I mean? Like, that's all we can do. We can only do what we can with what we got. And I think that you guys think that your agents are supposed to be magicians, but really we're supposed to present you in the best light. But you got to do your part. That's it.
Oh, man. Look, and I'm going to tell you from a lender perspective, I haven't seen a contract with a sales concession since prior to COVID.
See? Woo.
It is just not. No, I'm lying. I've seen 2 contracts, 2 or 3. But it was probably like little, it wasn't even real concessions because it was repairs. You know what I'm saying? So in the FHA contract, we couldn't give them a credit.
It's not concession. That's exchange for an exchange. That's not a concession.
Yeah, exactly.
3 years ago, I can say the house $350,000. My buyer's FHA. We need $10,000 in closing costs. We're gonna close in 30 days. Approved. won the offer. Now I wish I would right there. For what? It's just not, because they already tell you, yeah, we got 14 offers. Yeah, we got 10 offers. Yeah, we got 12 offers. You know what they say, the buyer's agents? This is the buyer's agents. The buyer's agents is running around. You a runner, you a track star. You know what the listing agents is doing?
They sipping their wine.
They shuffling the office.
So wait a minute. Let me ask you this though. What do you, as far as down payments, right? Typically for your clientele or for offers that are getting accepted that you're bidding with, what's the down payments that these people are putting down right now? 10%?
Yeah, 10%.
So 10% is a go.
Yeah, my clients are putting 10% down, and most of my buyers right now, I don't even have one FHA buyer under contract. Everybody's conventional, and we're all putting down 10% or more.
Wow. So 10% is the mark then.
Yeah, because 10% looks good. 10%, when you look at that financing contingency, 10% is like, wait a minute, they only financing 90. They got a little money.
Wait a minute. So what if we do a little hack though, right? I'm gonna put down 10. I'm gonna show you proof. I'm gonna show you proof of funds of 10, but I'm gonna go get this 3% or 5% loan.
That's your business. Let me tell y'all something. Once you actually put that on the financing contingency and your offer get accepted, how you maneuver around the funding, especially if your agent puts a certain little line item that says all affiliated lenders, so you're not attached to one lender, you can really do what you want. Just get your offer accepted. See, again, a lot of y'all agents say they suck. They not hustlers. They don't get it. That's why y'all losing.
So they're not telling them the hacks. Basically, look, say we're going to put down this. If you got $100K, let's just say your 401k retirement, whatever. You got another 20, 30 in your bank account. Say, look, seller, I'm going to put down 10, 15%. And I'm going to pay this appraisal gap. But when you go do your loan, you're doing it at a 95% loan.
You can do what you want. They don't have no business in your lending information. This is the thing. They're accepting it blindly up front based on what you provided on the financing contingency and your lender put on your letter. And if your lender, like my lenders, they know, you better write on that letter what I say. Put that there. Let's not have any red flags. Let's win our offer. And then we can shuffle and shake throughout this thing and make it happen and get to the closing table. But I need you to win the offer first. And that's how you do it.
Look, guys, that was a hack. So if you got some coins with you and you're able to move and shake and shuffle the deck, you might want to say you're going to put down 10%, show proof of funds, say, do what you got to do. And then when you go to your lender, kind of say, nah, I'm not doing that. You know what I'm saying? Like, give me the maximum financing, please.
When is the last time you sent disclosures to a seller?
Never.
Exactly, because it ain't none of their business. That's all I'm trying to say.
And when a listing agents call me and trying to get up all in my client's business, I say, look, man, you calling the wrong person for this information.
Yeah.
Don't call me. You better call that buyer agent or call the buyer directly if you want to know proof of funds and this, that, and the third, because that's not my place. I can't divulge their private information to you. But some of these listing agents, man, I guess they missed that part of the class. They be trying to get all the information.
Because the sellers be at us like this. I want my money. So I'm being honest. You sellers, I love y'all to death, but every seller I got want to make six figures. They don't care if they only live in your house a year. They don't. I think it's just they don't care. And we got to talk them off the ledge. Like, oh, okay. I had one client. We squoze literally like $85,000 out of this house. And I was like, well, we'll replace the carpet. She started calculating. She was like, if I replace the carpet, I can get an extra $15,000. Boom, she did the carpet. Like, they literally want to make the money. And this is one thing you got to realize. So everything else you need to have an agent that can navigate your contract and make things happen.
Look, so we got a lot of good tips, man. How long have you been on this so far, Tokes?
It's been an hour.
An hour. Okay. Look, a lot of good tips in this hour here, right? You got to know how to move and shake that lingo. If you got in that contract, if you got some funds, we gave you a good hack. Go for rehab properties that need rehab. go away from your comfort zone of area you really want to be. Maybe you got to go a little further distance to get the house that you want. I mean, there's a lot of different tips that we gave you folks out there that are trying to buy homes with minimum down payment. FHA, conventional, VA loans, USDA, NACA, whatever it is. We gave you a lot of information. That way you guys can present your offers better. You're going to probably have to watch the replay of this and have a pen and pad because there's a lot of information in here.
Yeah.
So, all you guys need to go ahead and like this video too, because it's about almost 500 of y'all in here, and it's like 200 likes. So y'all completely playing yourself right now and doing me and Quiana a tremendous disservice because we up here for a whole hour giving y'all rants and gems, like a little versus battle over here, and y'all can't even go and smash that like button for us. Like, come on, and throw a couple super chats our way. Like, come on, people.
I mean, show us some love.
Like, show some love, baby, to the channel and to the Rants and Gems show, which is coming next month because I put it out there in the world now.
It's coming next month, guys. We're going to be ready for you guys. I can't wait.
I'm flying to Atlanta when, Quiana, to start filming?
It's next week.
Yo, Tooks, she don't sound confident, son. Y'all hear this shit, right? She said next week. Yo, we got the real estate versus somebody said in the comment. I like that, y'all. Make sure, look, like, comment, share, subscribe. Make sure, Quiana, tell them how to find you.
Make sure you keep up with me. You can go to any of my social channels or my name, which is QUIANA WATSON. That's Quiana Watson. Matt done put his foot on my neck, so you need to follow my YouTube channel, Quiana Watson. We dropping a video next week because I said it. I'm gonna do it, Matt, and there's gonna be a video on there. And then also you can follow me. I'm really big on Instagram, Quiana Watson. Visit my website, QuianaWatson.com. Let's connect.
Agent Tools for Success.
Any training, any online training, any real estate training, go to agenttoolsforsuccess.net. Today we celebrated a lot of our members that did amazing things in the first quarter.
Tell us about Spotlight. Let's spotlight one of your members right now.
Okay, so one of my members, I got to read her numbers because it was just so crazy that she shared it. So one of my members, we had to highlight her because she sold what she sold the whole last year. She sold the first quarter of this year.
Woo!
So it wasn't like it was little. So let me go ahead and go to her. So she was like, Quiana, I can't believe this. I sold $4.2 million last year. This year I ended the first quarter selling $3.8 million. Sold. And I secured my first sale over $1 million. And I'm actually shopping with buyers with over $300 million. So that's $3.8 million under contract, $2.9 million in approval. So
wow. Shout out to her. And
all
Agent Tools for Success was that training that helped her get to the next level.
Absolutely. It's the glue. It's the glue that's holding it together, that's bringing everybody. I'm taking everybody with me to the top. So they're learning the systems, the tools, the resources they need to be great agents to represent you guys. Because my agents, they know when the mandatory clause is. And they know how to use it.
Yo, shout out to Watson, Realty, Bree. I can't remember what's her name.
Bree, Kiara, Ariana.
Kiara, yes. Bree, Kiara, shout out to y'all, man. Nothing but love for y'all. They definitely know they shit, man, because they be on the gram, they be having their videos, and I'm like, man, these girls done came a long way.
Listen, they my day ones. They've been with me shooting in the gym, and it's so exciting to see because you take for granted the amount of knowledge that you have, but when you start instilling that knowledge in other people and you see them flourish, it's just really amazing to watch.
Yeah, no, it's a beautiful thing, man. I'm super proud of your success. I'm so happy that you out here training these agents with Agent Tools for Success because a lot of agents and realtors out here, they need this because when you get into this business, it's easy to pass your test, right? Pay a couple $100, you pass your test, but there's no mentorship, especially for people that look like us, right? There's really no mentorship for people who look like us in this industry from a real estate side or a loan officer side. And that's why when I drop this MG Mortgage Academy next week for realtors and loan officers, teaching them real estate financing and how to use real estate financing to grow their business, make money, and run 6-7 figure businesses, like they need people like us to teach them this game, to teach them how to be successful because a lot of people out here just get thrown to the wolves and don't know what the hell they're doing, and they just be messing up deals and most importantly, messing up people from their generational wealth because they're structuring these deals all wrong.
Yeah, completely wrong. And even with Matt, like I can tell you one thing about Matt. When I first got on here and I was talking all that, and I was like, I could get out loan officer stuff. You could have thought I was a loan officer. He was like, yo, I can't even say nothing. You know what you're talking about. Most realtors, if we're like peanut butter and jelly, you need the jelly. You need to understand lending. So when he dropped the blueprint about mortgage services, I'm like, Matt, that's it. And he came and taught a class with my Agent Tuition Success membership. First of all, they still going buck wild on that class.
We have fun.
We had fun, and it was open for them. And education is the key to your success in anything, whether it's from a consumer or business standpoint. So make sure you're educated. I can't wait till you drop your academy. It's going to be wild.
No, it's definitely going to be wild, and I'm glad you said that. Most realtors, the most successful realtors that I know, they understand lending. And a lot of realtors out here just say, oh, I'm going to pass it to the loan officer. And when things go wrong and then they come to me, I'm like, all right, tell me what happened. They don't even know. They can't even articulate it. And that's bad because now your buyer is someone you've been working with for months trying to find a home, is looking to you as their resource, and you can't even explain things properly. You know, it's pretty terrible. So agents, man, and loan officers, y'all got to get your stuff together, man. Make sure y'all tap in with our movements. But look, we're going to end this right now. We had over almost 500 people watching this live. Make sure you guys follow Quiana, follow her movement, like this video, pay attention to what she's doing out there, because in Atlanta, she's out there giving y'all facts, numbers, and telling you exactly what's really happening out there. And stay tuned for that Rants and Gems podcast coming on exclusively on the EYL network. Shout out to Rashad, Troy, and the whole Earn Your Leisure family. And we're going to Atlanta next week, Tooks. You heard that. We got it on record.
We're
going to Atlanta next week. She just said it.
He come. We shoot. Filming.
Look. Tooks don't believe you. Tooks like we're supposed to be there a month ago.
Matt said we dropping next month, so we got stuff to do.
We got stuff to do. We booking our flights, Tooks. We out there. So look, everybody, I appreciate all y'all, man. If you're a first-time home buyer, rewind this video. Listen to the tips because we gave you guys a lot of information. We did this more in the podcast type of format, just conversational. Yeah. So it was just all freestyle. It wasn't like an instructional video. So you just got to go, you got to watch, and you got to listen, and you got to really listen and pay attention to these gems, because what we discussed in this video today could really help you get your offer accepted tomorrow. So stay locked in on that. Quiana, you already know what it is. Much love. I'm going to tap in with you later so we can lock down these dates. Because we said it live, so we got to do it now.
Now we got to do it.
Now we got to do it. And everybody go follow Quiana, and make sure you like, comment, share this video. And we're going to end this video with a word from our sponsors over at EYL University. I'm going to see y'all in the next video. Peace.
EYL University is the biggest online platform for education, but it's much, much more. It's actually a community. Our private Facebook group has over 8,000 members and 20 infinity groups. The students teach themselves just as much as the professors do. We have weekly webinars. We have over 100 past webinars. You get access to MG, the Mortgage Guy's Real Estate Blueprint. You get access to monthly financial planning calls with yours truly. You get access to our monthly group chat investment calls and much, much more. So, go to EYLUniversity.com right now and take advantage of our limited offer, blowout sale, 65% off of the annual membership. EYLUniversity.com right now.
It's Mad G, making moves, flipping real estate. We building wealth, get your minds right and elevate. It's the Mortgage King, we do it truly, bro. Dropping gems like a thief up in the jury cell. Wealth building equity in real estate, the mission. Collaboration is greater than competition.